Hey, what's going on, guys? Welcome back to Way Up Trading. Now, today I want to go over the AMC chart. We've been having some downside pressure on this chart here for the last couple of days. Ever since the earnings report came through, things have been on the downside and we've been downtrending almost towards the low $5 range, but we got the bounce that I was looking for at the 516 range, and looks like we're about to start making our way back up. I'm going to take a look at the chart real quick and see what we have going forward into the next couple of weeks. I do see some positivity here after this drop, but let's take a look at the charts. All right, taking a look at the chart here, I have the 1 hour chart pulled up on the on AMC, and we're taking a look here. We can see that we've been in this bullish channel. Now, I do include the after hours time frame to get more information on how the chart looks overall, not just the regular trading hours, but I do take in consideration the volume, the average volume, as well as the patterns that I can see. And taking a look here, this is the bottom end that we had from March 16th, which was the fall from our 853 high back in the beginning of the year after our Q4 earnings report at the high of 843, where we barreled all the way down after the retest of the descending broadening wedge top, this yellow line, which is our holy grail trend line, we're going to call that. Shouts to Trades. This one was broken. We were rejected after having our halt, and we basically had been on a free fall at that point all the way till we dropped and based out at the $4 range. Ever since that point in time, we've created a bullish channel playing the up and downside with a midline that's been in place, where we found support on a couple different occasions, and then had barreled down after the Allegheny news, and then shot right back up to the top of that that bullish channel, and kind of been meandering between the top and bottom of this channel, breaking out of a larger falling wedge on the daily time frame. We'll take a look at the macro in just a few seconds here. But you can see we came back. But you can see after testing the midline right before the May earnings, we broke the midline, broke the falling wedge pattern, and had been on a move to the upside prior to earnings, all the way up until we hit the top just at about 620. Got rejected and hung around this area for quite a period of time before completely falling off, breaking the midline, and now playing the bottom end. This bottom end is exactly what I wanted to see, was a retest of $5.16, which is a very key level on the macro chart. And I'm going to move to the macro chart so we get a better understanding of what I'm talking about here. But before doing that, I just want to zoom in and just show a little bit of a idea of why I believe this is such a huge reversal point. On the downtrend, you saw that we had decreasing volume from the downtrend of $6.20, played a falling wedge, top and bottom, with two different levels of resistance on the downtrend. Played very sharply to the downside, shrinking iterations here, until we then tested this macro downtrend of the falling wedge. We've then caught the upside of the channel, or the bullish channel I mentioned a few moments ago, and we got a high volume hammer candle right here. This hammer candle shows us that we have a end of trend and a reversal pattern happening. We went ahead and touched the bottom here at about 508, which was a huge reversal location that I was looking for if we didn't hold a 516. 516 actually wound up being a very strong support up until it was showing a change in behavior, which took place here today. Roughly breaking this channel, testing the downtrend, and then quickly bull stepping in, recovering this area. High volume came in and it recovered and is now starting to move the stock back into a positive situation. I expect this move to continue from here. I know there's a lot of bears online and on Twitter and whatnot thinking that's just going to break down possibly to the 475 area. I'm still bullish in this particular period, and that's really because of the volume. Volume has been dry throughout the past couple of weeks now, ever since the earnings report. Here is the macro one-day chart for AMC. It's going to revisit the pattern that we're in. I mentioned them a few minutes ago. After our January squeeze, we broke out of a larger descending broadening wedge, got a retest of that wedge, which is the yellow line, very similar to this yellow line that we have here, which we've been rejected from on several occasions. Broke out of it, tested a midline of a larger bull channel that we're sitting in from the beginning of AMC to current times. We then fell out of this bull planet that we had after our June squeeze, which took place here, roughly beginning in May of 2021, pushed us up to $77 in June of 2021, and hung around here until we broke, then forming that descending broadening wedge, double bottoming on the midline of this a larger bull channel that we're in, the macro bull channel that we're in, and we got that second squeeze in March, came back down to a very low point, which then started to form this falling wedge. We're constantly rejected off of the midline of the bull channel, came out, broke through it, retested the bull channel midline, and we got an August 2022 squeeze, which is the information that came through about the ape dividend that came out around that time. Again, we were rejected, halted, and sent back all the way down, breaking through that midline, coming back and basically forming, continuing to play out this falling wedge as well as descending broadening wedge. Got to a bottom, a low of about $3 and change. And as we all know, we did start to reverse from there and start to create this broadening top pattern, which played on both ends up to 853 until we were fully rejected down to where we were recently after the news of the reverse split. So this area is basically a point of control. We constantly get pulled back to it in order for AMC to decide where it wants to go. And right now we basically had to hold that 516 level because of the fact that if we were to fall below it, it's going to look pretty bad. We would fall back into this falling wedge pattern, which right now we're just basically retesting it. Very similar to what happened prior to every squeeze that's taken place before we actually make the move. We'll typically get a retest of a midline or a falling wedge or a wedge pattern before rocketing back up. I feel that we're in that same predicament right now with this retest of this falling wedge pattern, and we're going to start making our way back towards trying to break this descending broadening wedge setup, the yellow line right over here. So we did find support here on the 50 moving average, which is what I want to show as well. So we found support on this blue line, which is the 50 moving average here, found support and found our bounce, which lines up and corresponds with this falling wedge top, which is now serving as support. If we fall through this falling wedge, we break this 516 level, we'd be then playing the $4.71 potentially, which is the uptrend from our lows of 171 back before the January squeeze here, which is $1.17 just about. So we don't want to do that. Now it's a potential if that were to break our lower point, because there is still a gap. Our lower point would be somewhere in the $4 range, $4.30 and $4.04 in that range, because we do have a gap that's still left to fill. Hopefully we don't go down there. If we can stay here and hold, I do have a lot of indicators showing me that this is the bottom, and also just plain old volume showing that there has been no more supply left on this thing, and they've hammered it down on very low volume. Not to mention a ton of bullish divergences that are showing up. So as you take a look at the volume profile, you can see this is obviously an accumulation. The signal line, this white signal line, is showing that we are well below the average of volume coming in. You can see the volume here, the red bars are showing a lot lower and smaller as time goes on, and it's starting to dwindle. There's just no more supply left. So this tells me, especially this being the lowest volume day in quite some time, this tells me that there's no more supply. They're doing everything they can to hold this thing down. Obviously the market is taking the tumble, and they're relying on that in order to suppress the price even further. I'm expecting some news to come out. There's some news that's going to come out. I don't know what it's going to be about. I'm not sure if it's going to be related to the lawsuit or something else, but this positioning is telling me that there's something going to be released beforehand. And when I say beforehand, I'm talking about before the reverse split details. And if we see something like that happen, we could potentially break this macro trend line or macro descending broadening wedge and start making a move. I have our break point and also our 200 moving average and 200 exponential moving average sitting just about 675. If we can go start making this way out, break this downtrend that we've been in the last couple of days, I can see the midline testing, this line testing, and easily starting to see the $6.70 mark. If we can break this area, if we don't get halted, hopefully we can start to make our way back up. In the short term, really need to make sure we break that $5.35 location, because that's going to be a huge area to get past. All right, back to the 1 hour here, taking a look at some of our indicators. You can see that we played out a bearish crab pattern throughout the last few days prior to the earnings report and all the way down to the current time. This crab pattern showed that we had targets set up at different locations. $5.97 was what we broke prior to the call. We got rejected at the top of the wedge, and then from there it's been just barreling back downward until we hit our certain point. But you can see our levels that we had in place prior to the move up and down. Got an idea that we'd go and bounce off this area in advance, and we did just that after playing this entire panel and playing this entire bull channel. 509, we got a 508, like I mentioned before, a high volume hammer candle back up, And I want to see this break and start breaking back up into this area around 530 to 535, and then eventually hopefully get back above the 50 moving average and start trading sideways until we can get our bearings about us and start working our way back through this channel. I don't expect it to happen right away, but the time frame I'm looking for is more so in the beginning of June. We can start seeing the $6 range and then some. If we can break this area and break this downtrend, I can see it start to move pretty violently, hopefully toward the $10 area. So within the next few weeks, $10 is what I'm looking for. I think it's going to be coupled with some type of news. I'm expecting Adam Aaron to put something out that's going to be pretty bullish. We do have a couple movies coming out. Fast and the Furious Part 10, Fast X is coming out on May 19th. That should be a pretty big movie for the company. Hopefully some type of news comes up with the popcorn sales or whatever he's doing with the candy market. So hopefully something comes out that's going to change the layout of what's happening with the stock, but there's just no more supply. This thing is going to turn around very soon. And I think anyone who purchased in this area should be okay. Very worst case scenario and bear scenario, if we do break this location, I'm expecting us to go and complete a further down move to about, like I mentioned before, to about 471. And if that fails, this is again playing the uptrend somewhere around here. That would be about the end of next week or so. That would break us back into the downtrend of the falling wedge, also playing the uptrend since the bottom. And then we start making our way back from there. But if we do break that and we then go fill in the gap, it's going to be a tough next couple of weeks. But hopefully that we can start to make some kind of progress back towards things with some positive news, maybe some good movies coming out, and start to move back up. But so far so good. We have a chance right now to start to make a reversal, and the volume profile is telling me that this is what's looking like it's going to happen. But we'll see how things work out. Just keep a lookout on the stock. I'm paying very close attention to it. I bought more shares today. Bought a couple of options. I'm looking right now into 6/16 options, or June 16th monthlies for $10. If we can start to get towards that mark, if we start to see the kind of movement I'm looking for, I may add to the position, but I'm in there very lightly right now. And if this thing starts to really take off, it'll be for good reason, because I do think we have some support and we have some reason to believe that we're going to stay in the positive side of things from here. But this may have been the bottom, in my opinion, for us to start to make a reversal. So keep a lookout on AMC. I'm paying very close attention to this thing. I'm talking about this thing constantly on Twitter. So if you're not following me on Twitter, follow me there. I do post high quality plays for the most part, and we try to make things happen and pay attention to what's happening with this stock, because I do want to see this thing start rocketing up. Long term, I'm looking for, like I mentioned before, June, I'm looking for about $10 and change. Hopefully we can get towards that area. But in order for that to happen, we need to see some kind of reversal back above $6.13. And if we can do that, $6.13 would be the play. If we can do that, we can start making our way back up. My second target, ABCD here, you can see I have it at 919 off of a bullish bat pattern. So this is harmonics. If it's something that you're interested in, leave a message in the comments and we'll talk more about this going further. But this basic harmonic pattern is letting me know what our areas are looking like. But we need to get back into bullish territory and actually start to play the chart. This is the 3-day chart, 3-day time frame. If we can get back above 613, we have a chance to go ahead and start to head towards our second target here, ABCDE, at 919. And then from there, which also coincides with the midline that I've had on this larger bull channel we talked about a little while ago. If we can start making our way, I could see further into the end of or mid of the summer, or end of the summer, we can start playing towards the target 2, which I have up here at about $29.85. Again, breaking all the downtrends, breaking all the midlines, and start working our way back up. It can happen very fast if the right kind of catalyst comes up, because of this thing being so suppressed and volume being delayed. If volume is opened up for whatever reasons above this signal line, get ready, because this thing will rocket up and out of this area without any holdback. So we can see a high move to $30 very quickly with the right information and the right catalyst to go along with it. So anything can happen with this stock. One of the most manipulated stocks I've ever seen in my life. But for right now, let's just play it level by level. We break $6, $6.35, $6.13, and we can talk about being off to the races. But for now, like I mentioned before, follow me on Twitter. Link is in the description. Like, subscribe, and hope to talk to you guys soon. All right, so that pretty much wraps up the video, and I want to know what you guys think. Leave your comments and questions down in the comment box below. And of course, if that button is still red, go ahead and click like, subscribe, join us on the way up. We're going to be here every single day, growing our portfolios together and making the outcome income for 2023. Don't forget, leave your comments, like, subscribe, and we're going to see you on the next video.